Good evening, everyone. Welcome to the Journey to Become Wealthy. My name is Kelvin Reed, and today is Sunday, right? Sunday, we have entered a new month. We are officially in the month of October, and the markets have been taking a beating over the past month of September, right? We know we've seen things come way down. We hit some new lows, and we actually continue to come lower in some of our indexes. Sad to say, but hey, it is what it is. That's what the market does. But we here to weather the storms, no matter what it is, and we're gonna all figure it out together. But before I get into it, make sure you like, subscribe to the channel, hit that notification bell so that you get notified when I make videos. So let's talk about it, guys. Let's talk about it. We hit new lows last week, right? We hit new lows. We saw the market come down extremely deep, and I gave you all the levels for that. Hopefully, you all took the bag and ran with it based on those levels. As a matter of fact, let's take a look at them. So here we got the SPY. I told you all, here's our level support, right? And look at what happened. We basically fell all the way through it, and we stopped right here at the bottom. I pretty much had it almost perfect, not exactly, but almost perfect. And in that after hours that day, we actually came up. I do believe currently in the current after hours, so that means international markets where they trade the SPY and other indexes. I think we're down as of right now, but we won't know officially till the morning. I try not to trust anything until I see it in the morning, right? So this is where we are. We closed way down on Friday, and we enter into a new month in the negative. We beat those June lows, right? We know June 16th was the lowest day for the month, for the year, and now we beat a new low, right? 357, where it was 360 before. It is now 357.04. I am really hoping to see us reverse from this point on, right? I want to see us go back up to the upside. If you know me, I played Tesla high and heavy. It did what it does, right? It did what it does on Friday. It was up and it came back down. Either way, I made my money as necessary, and we kept rolling. However, it has not come back to its lows. Fortunately, right? That's a fortunate thing for me, in my opinion. Tesla is going to be one of those stocks where I'm going to keep trading it. I'm loving the way it's moving. I'm loving the momentum. It is not hitting the bottom like many of these other ones. It's taking a beating, but it's not taking as terrible a beating as they are, right? So let's actually take a look at the markets. Like I said, I know I missed y'all on Friday. I had needed some rest and relaxation time for myself. While we're talking about that, I forgot I got my wealthy word of the week, but I need some rest and relaxation time for myself, and that's pretty much what I did. So hopefully you all did the same, so we can enter a new week next week refreshed, relaxed, and ready to make this money. So on Friday, the Dow closed 1.71%, S&P 500 down 1.51%, Nasdaq down 1.51%, and the Russell down 0.61%. If you look here though, we see the VIX came down just a little bit, down 0.69%, but we still see our fear and greed index at that 15. And that's mainly because, like I said, we ran up hot and heavy for a good minute on Friday. However, things came all the way back down, which pretty much hurt everybody, I'm sure, because we thought we had a little relief in the markets. But it didn't finish that way. So the word I want you all to keep in mind is correction, right? Correction. As of right now, the stock markets are correcting. Prices are correcting. The housing market is correcting. That means where prices ran up extremely, this inflation, where these prices ran up extremely, they're correcting and coming back down. Hence, the stock market pulling back the way it has. This is a correction. The market is correcting. Now, I do think it is overcorrecting extremely, because the last time we were at levels like this was 2020. 2020. As a matter of fact, I even read an article that said this was the worst month since March of 2020. So apparently in March of 2020, somewhere back here, let's see if I can go back that far, we had a bigger dip. So you all see it here, but it won't let's see if it'll let me get it. It let me get it. We had a crazy big dip. So look at this. It went from this high to about here. And that's over the month, period of a month. They say that's the worst month. But as of right now, we're in a worse time than what happened in March of 2020. So as you all can see, we are definitely in a period where things are, happening and money is being lost. I mean, these stock markets, it's definitely a major correction going on. So you got to make sure you learn from these things. And you all see me maneuvering this chart. Y'all make sure y'all even taking notes and learn things like that. because charting is the way we're going to continue to make money in these markets. But one thing I want to talk about, I found a nice little article about the housing crisis. The home price correction intensifies. What to expect from the U.S. housing market in 2023. Now, of course, you all can Google this and find this on your own, but it's just one thing it's a nice little passage in here that I wanted to point out and read to you all, because I know life continues, right? No matter what's going on with the economy, no matter what's happening around you, around the world, life goes on for each and every one of us. But with some things, just got to keep in mind so we make smart decisions, wise decisions as we go forward. So housing affordability is driven by many factors, but the two key inputs are home prices and mortgage rates. We just lived through a unique period in American history where rising home prices were offset by record low interest rates. So if you bought a house in the past year or two, you got a super cheap interest rate, but you might have paid who knows how much for your mortgage. So things kind of balanced out. Or if you bought it before that, you may have even had a super cheap mortgage and refinanced for a super cheap interest rate, and now you're winning, like myself. I bought my house 2017 January at a great price, right? Before the market was just booming like crazy, and I had I want to say about a 4 or 5 interest rate, but now I refinanced them down to about 2.74 interest rate. So I'm winning, extremely winning. House, decent price, and nice interest rate. But not many people, especially new home buyers, will not be as lucky. Interest rates have risen dramatically since the start of the year, though putting a strain on housing affordabilities. Buyers were already starting to get priced out of the market when interest rates rose from 3% to 4%, and every 100 basis point increase has continued to price millions of Americans out of home ownership. If mortgage rates remain elevated for an extended period, we expect that housing demand will remain soft, new home construction will be restricted, and home prices will need to adjust downward across the country. So I pointed this out. Y'all know why, right? Because I told you at the beginning of my journey, one of the things that was on our list, homes, real estate. We want to make money. We want to make multiple streams of income by any means necessary. Real estate. Now you got to keep in mind, of course, interest rates are high. Interest rates will be high on buying a home. However, if we can find cash homes at this time, we may be able to find houses cheaper than we will be able to find them over the next couple of years. So remember, I told y'all this was going to be an opportunity of a lifetime where we will be able to get things at the prices that our parents, grandparents were getting them. So hopefully, houses. Matter of fact, in this article, it said housing prices rose by about 43%. I want to say. So let's see if we can find that, right? It said happen, but matter of fact, we just go on paragraph, right? Paraform it, whatever it is, paraphrase it. So in this article, y'all see it, the home price correction. If you want to look it up, it says housing prices rose. U.S. home prices soared 43% in just over 2 years. If we can see those prices come all the way back down, 2 years, right? So that means you get 2020 prices. If we can see those prices come all the way back down, maybe even lower, we have the opportunity to take advantage of that. Although interest rates are high, we have to be looking for other ways to get around that. Or we can just be potentially looking for long-term investments. So you can buy a house for cheap. You pay the higher interest rate now. As those interest rates come back down, you refinance. Right? I'm giving you all the game now. You refinance. You got a cheap house. Now you have a cheap interest rate. And you continue to make your money. And, of course, housing prices always continue to rise. Now, I know during this time we don't want to raise housing prices on anybody or rent or anything like that. But in the future, right, we're looking for long-term streams of income. We're looking for generational wealth. So we're not looking for something short. We're looking to build wealth over time. So these are things to kind of keep in mind, some ways that we can play the game as we go forward. So I'm going to tell you all now, I am going to be looking. I'm going to be keeping my eyes open and just staying aware of prices, houses, anything that I can find that could potentially continue to build my wealth just like the stock market has. I'm headed in that direction, right? So that's what I got for you all. I just had to make sure we were aware of that, because I do believe that on Monday we could potentially see the market go back up, but who knows? Maybe things will so be down. We may see a lot of capitulation, meaning people getting out of the markets, and the market could continue to go lower until we hit a point of support where those millionaires or the big dogs feel like, hey, they gotta jump in and save the markets. But as of right now, things could hit a downturn. They continue to trade sideways as they have right now, because we didn't even look at what it did for the week, right? But although I know that it was down for the week. So matter of fact, I gotta show y'all that just so we can kind of keep it down in our mind. For the week, down 2.64% on the Dow. For the month, 7.7%. Let's check out year to date. 21.48% year to date on the Dow. S&P 500 on the week, down 3.06%. The month, 8.25%. Year to date, 25.25%, you guys. So our indexes are taking a beating. We are fully in the bear market right now. We are fully in this thing. We are 100% in. So the NASDAQ down 3.66% for the week. For the year, 33.20%. The Russell for the week, 1.41%. It didn't actually take a beating too bad. It traded pretty sideways, fairly flat. But year to date, 26.75%. So I'm telling you all now, although a large part of my portfolio may be taking a similar beating, as long as I am beating these year to date numbers, 26.75%, 30%, let's see, 33.20%. Let's check it out, 25.25%. And I want to say this is 21%, 21.48%. As long as I'm beating those numbers in my individual stocks, which only way I'm doing is by averaging down, then I'm okay. I'm trying to stay down only about 10 to 15%. If I can't keep up with it, then I should stop investing now. Or if I feel like I've hit my limit, hey, this is as much as I want to put in here, I stop putting money into that, because who knows when this thing can end. I have been hearing so many rumors that 2023 could be so much worse than 2022. So who knows when this thing can end. However, as long as I stay beating these indexes, I know that I am on the right side, because when things hit the upside, I am going to start seeing profits so much sooner than the rest of these indexes or individuals who just been holding or who sold at the bottom, right? The name of the game is to buy at the bottom. Buy low, sell high. So many individuals buy high. They get excited by the run up. Oh, all the green. They get excited. They buy high. And then, oh, the red. Oh, no, I'm losing money. And they sell low. That is not the way we play this game. We play this game by buying low here during this time coming down and selling high when things finally start to run back up. That is how we're going to build our generational wealth. We are going to continue to invest as the market plummets. We're going to continue to build generational wealth by looking for other things like housing, real estate, investments to make our money. So again, correction is our wealthy word for this week. Make sure you all look that up. Make sure you all drop some examples in the comments if you feel like. But for now, thank you all for joining the channel. Make sure you like, subscribe to the video, and I'll see you all later.